But let's take it across to Abhimanyu Sofat, chat about how 2019 is likely to be. Abhimanyu, firstly, wishing you a very happy new year and your entire team as well.
Yeah, thanks a lot to everyone at ET Now as well and its viewers. Hope this 2019 is a great year for all of you as well.
We hope so too. But Abhimanyu, just taking a leaf out of what Rakesh Jhanjhanwala was saying, do you think the upcoming elections in 2019 will have a big bearing on the markets?
So obviously, whenever there is a election result that comes in, there is an increased volatility that will happen. But structurally, I think so. If you see right from the time of 1990, when we have had various governments coming in, whether it's the Narasimha Rao or before that BP Singh, Chandrasekhar, and later on as well, all Vajpayee and Manmohan Singh, governments. What we have seen is structurally, if you have a long-term view in India, who comes in power doesn't matter. There may be 5% here and there, movement in the index because of what's happened in elections. But I think so earnings growth is what the key factor which will determine where the market would be 2 years from now. And what we are clearly seeing on that is that there is an improvement happening, at least on the sales side. Like for example, in the last quarter, top line growth for corporate India was close to around 28%. On the bottom line, there have been pressure because of crude price, but now with the crude price reducing by close to around 26% in last 2 months, clearly we are seeing that the margin pressure also easing. And for this reason, I think so 2019 from a risk reward perspective is significantly better relative to 2018, and we would be bullish, obviously on a stock specific basis across sectors where we see that the earning traction of companies is relatively better to competition. So that's the thought for 2019 as of now. It's very difficult to get more into a sectoral themes in 2019 because I think so based on how the companies are positioning, we are unlikely to see a very robust kind of growth all across. So it has to be always a dispersion in terms of earning growth as well as return for investors in 2019.
Before anything else, Abhimanyu, what is it that you're advocating as your top buys in this year?
So from a large cap perspective, I think so Axis Bank looks quite decent to us at 2-time price to book, earning growth of around 17%, and with the RBI report also indicating that going forward, NPA's stress may be reducing. I think so these wholesale banks are something from the private bank side that one should be looking at rather than bottom fishing on the PSU side, because we still don't know what will happen there. Clearly on the PSU side, we have seen that loans to SMEs has increased dramatically over last 1.5 years. So what happens on the asset quality there, is something which one doesn't know of. So from a safety perspective, I think so Axis Bank with a new CEO joining in and changes happening on the top level looks to be quite good to us. Also the Larsen & Toubro, considering that we are seeing regular divestment of the non-core areas leading to an uptick on the ROC for the company, that is another stock which looks quite good to us as we head into a recovery on the capex cycle. So these are the two stocks from the large cap that we currently are quite positive on.
Okay. Axis Bank is at 620. What do you think the change of guard at Axis Bank would do? Because the minute the news of change of guard in Axis Bank came out, the stock quickly ran from 450 to 620. So some would argue that the Amitabh Chaudhary premium is already there in the price now, and now it's about earnings recovery and now it's about credit growth. And I think there is just early evidence that the bank has generally turned around. I mean, the business is yet to turn around completely.
Yeah, fair enough. Stock price is always are ahead of what actual things happen. But I would agree with you, it is the core earnings growth which we are banking on in terms of being bullish on the bank at this particular point of time. We clearly see that CASA accretion to be quite good for the bank going forward, and there is a huge scope of expansion of margins and reducing cost to income ratio for the bank. From that perspective, I think so it's a very decent pure play kind of a bank which is currently available at reasonable valuation. Looking at, if you look at say a Kotak Bank, multiples are a bit high. There's a hangover of what happens on the deal with what happens with RBI. HDFC also looks good, but obviously valuations are a bit higher there. And so Axis and ICICI also, I would add, are the ones where one can hope that the earnings recovery will be faster and the positive impact will be better, and especially from a risk reward perspective is what we believe that Axis should do better going forward.
Abhimanyu, you have been quite categorically stating that Axis Bank is preferred by our ICICI Bank, and you are in minority in market because most of the participants are liking ICICI Bank for varied reasons.
Interesting data as to, in terms of market positioning, how exactly is the 2018 positioning? And Jayesh has done some fantastic work to analyze that which are stocks which are tracked by at least 10 analysts, and what is the current potential target or the view which every brokerage house has put out. And there's some fantastic data on what are the current price targets. Now look at Dilip Buildcon, Simplex Infra and JSPL. The brokerage view is that 2019 could be a blowout year for Dilip Buildcon, it could be a blowout year for Simplex Infra, and it will be an interesting and encouraging year for JSPL. Minute you look at slightly more bigger names, which are part of the large cap basket, which are part of the Nifty 50 basket, you actually would be surprised with where the names are. In fact, these are some of the names where the downside targets are also very pronounced. So for Avenue Supermart, the general view is that the stock could give a negative return of 20% this year. Bank of India, it's irrelevant in the overall scheme of things. Indigo also, the view is that it could give you a downside of about 20% despite crude where it is. So I'm just trying to mark out the positioning here, at least for some of the large cap stocks. And the most consensus stock in the large and the mid cap basket is actually Dalmia Bharat, where 26 current buy calls are there. And the potential, or the average potential for Dalmia Bharat for 2019 is as high as 15%. But the common thread, Abhimanyu, I can see across all brokerages is that all brokerages are bullish on EPC companies, whether it is Ashok Buildcon or Dilip Buildcon or NCC or for that matter L&T. And I've always seen that too much of consensus is dangerous.
So I think so one reason could be that the earnings downgrade for some of the companies may not happen, because the kind of fall we have seen in some of these names would have led to some of the analysts slowly cutting down their estimates. So I'm sure after this particular quarter results, you will see a pruning of target prices by most of the analysts for some of these companies. If you look at EPC companies, I think so one needs to look at things from two perspectives. One is that clearly there is a mindset that there will be an improvement in the capex cycle. Interest rates are not going to go up going forward, and then because of that there will be some improvement in earnings. Now if you look at the numbers, I think so power sector is one sector where still we have not seen a traction in terms of growth going forward, except for if you look at order book of companies like KEC, which are doing pretty well. So from an EPC company perspective, I think so we need to be quite stock specific of which particular company we like. Like for example, in case of power, we like something like KEC, where growth is expected to be pretty good. Overall, I would say that one needs to look at each one separately. In case of Dilip Buildcon, I think so there were some other concerns also which led to the fall in the price. So one has to evaluate everything separately. Debt equity is another thing which a lot of these companies are grappling with. So I would advise a caution on some of of these names by investors and not expect 70-80% kind of upside in these stocks over next 1 year.